We're joined in studio with Raafi Hussain, the CEO of Fasset, to talk about the exciting world of real-world assets. Raafi, welcome to Crypto Weekly.
Thank you for having me.
Raafi, I want to start, obviously, in 2025, RWAs, real-world assets, are a big topic. Do you expect we'll have more interest on RWAs in emerging markets versus developed markets?
Absolutely. I mean, think about RWA, real-world assets in emerging markets. Getting access to real-world economic upside in emerging markets is incredibly difficult. Very simple example. If you think about any random emerging market, you can buy your iPhone, you can buy your MacBook, but is it easy to own Apple shares? It's actually incredibly difficult. It's much easier to buy these goods versus owning these shares. And I think that's really what RWA comes down to, using the same rails that emerging market users are buying crypto, getting them access to the brands, the shares that they know and love.
So let's talk broadly about the crypto industry. And to what extent do you think that what's happening in emerging markets is similar to what's happening in developed markets when it comes to the excitement and the adoption?
I think emerging markets are actually the leader in use cases and adoption when it comes to crypto, where crypto in developed markets is more used as a speculative instrument, an instrument to potentially get rich faster than your traditional markets. In emerging markets, there's actually a need for crypto. It's not a nice to have, rather it's a need. So even as something as simple as moving US dollars from Africa to Asia, normally you'd have to go through a correspondent bank or two to get your US dollars from one country to another country. Now with stablecoins, this is the average person using this every single day. Very different to how we would use that in America.
I mean, you mentioned stablecoins. Obviously, stablecoin assets have reached 200 billion. The last year, there was 27 trillion that was settled using stablecoins. This year, actually, 2024. What's your view on the growth of this? Do you expect what you just mentioned, stablecoin volumes will continue to increase in emerging markets over the year ahead? And can this be the way to get the billion new users in the crypto space?
Absolutely. I would say post-COVID, and definitely over the last 12 months, stablecoins are firmly found its footing in emerging markets. I think the inflationary environment that we've been in over the last 24 months in countries across Africa, across South Asia, Southeast Asia, has put stablecoins firmly in a user's portfolio, not just from moving money, but actually hedging against their local currency. So I think in 2025, what we'll see is not just the adoption and the use of stablecoins, but a number of products and a number of financial instruments built on stablecoins.
So when you look at the regulatory framework, if we compare what's happening here in the region and in emerging markets overall to what's happening in developed markets, to what extent do you think that we're getting there? We're trying to have more advancement in the legal framework in order to compete with what's happening in developed economies.
Absolutely. I would say, to be honest, being across Africa and Asia, working with over a dozen regulators, that the regulatory environment in many emerging markets would actually surprise you. So if you take a country like Indonesia, Indonesia actually has the largest, what I would call, contiguous license for crypto in the world. One license covers 280 million individuals. No other license gets you that much coverage anywhere. And Indonesia, the regulation is so tight that even the spread and the pricing of 280 plus cryptocurrencies are managed by the regulator, which is impressive.
It's interesting. Often people will have a different perception when it comes to emerging markets versus developed markets. I want to ask you, Raafi, about even the type of innovation. You mentioned you're very active in Asia and Africa and the Middle East. Are you seeing particular innovations in the digital asset space come up from these regions that we may not see in developed markets, for example?
Absolutely. Look, I mean, if you take countries like Bangladesh or Pakistan or to a certain degree Nigeria, simple things that we take for granted in developed markets, a car loan, a home mortgage, they don't exist. Literally these entire industries do not exist. So when you think about the adoption of crypto, the adoption of real-world assets, for the first time, companies like ourselves have the opportunity to offer such products in these markets with a simple click of a button.
How do you see the real-world asset landscape evolving in the decade to come?
I would say any and all assets moving forward are going to be found on blockchain. So this is really the real-world assets. Now we're calling it RWA on blockchain, but I think this is going to be the standard moving forward.
And what is the risk, though? I mean, so as this moves along, this year we saw a lot of treasuries, for example, come on and get more adoption in the crypto space because of that, because of RWAs. What do you think is the risk that we may face that may slow down the development of RWAs?
I would say cross-border regulation. right? So there's still, as domestic regulators continue to tighten, sharpen the regulation, ultimately when it comes to RWA, the ultimate ethos of blockchain is cross-border. It's actually borderless, rather, right? So now when you think about moving securities in a borderless environment, you actually need regulators to come and work together. I would say membership such as ASEAN, such as, obviously we've been seeing things in the EU, will play a huge role in ensuring that these markets can frictionlessly move into the RWA space.
So let me ask you a question. It's the headline everywhere when it comes to crypto. We have a President-elect Donald Trump entering the White House on the 20th of January. So to what extent are you optimistic that a lot will change during his next 4 years term?
Whatever we were going to do in 20 years can be done in 4 years now, I would say.
What are you looking at?
I'm looking at, more than anything else, it's the signaling of the Trump administration to the rest of the world that crypto is here to stay in the US. Ultimately, all goods, all assets, all RWAs are denominated in the dollar. When an administration comes and signals that we're going to back this industry, it forces everyone else to get their act together, get innovative. So more than any regulation that America espouses, I think it's the signaling that will make the world of a difference.
Here we go, the signaling of crypto and RWA as well. That was Raafi Hussain, the CEO of Fasset. Thanks for being with us today, Raafi.
Thank you for having me. Thank you.